Welcome to Concrete Block. I'm your host, Walter. Today, we're diving into a major shakeup in the global oil industry. The United Arab Emirates has announced its decision to leave OPEC, the Organization of the Petroleum Exporting Countries, and its wider alliance, OPEC+. This move marks a significant shift in the UAE strategy as it seeks to navigate the changing landscape of global energy markets, particularly in the wake of the ongoing Iran war. The UAE's exit from OPEC is slated for May 1st, after nearly 6 decades of membership. According to the country's energy ministry, this decision will allow the UAE to meet evolving demand and gradually increase its oil production. The move comes amidst long-standing tensions with Saudi Arabia, both over oil output policies and competition for regional influence. It's worth noting that the UAE has previously considered quitting OPEC due to disagreements over production levels and investment in new capacity. However, this time around, the country seems determined to forge its own path. Energy Minister Suhail al-Mazrouei stated that the decision was made after a thorough review of the UAE's strategies and that it presents an opportune moment, given the current market conditions. The impact of the UAE's departure on global oil markets is expected to be limited in the short term, primarily due to the supply disruptions caused by the Iran war. Oil futures are currently trading near $111 a barrel in London. As the situation unfolds, we'll continue to monitor developments and provide updates. In conclusion, the UAE's decision to leave OPEC marks a significant development in the global oil industry, reflecting the country's desire for greater flexibility and autonomy in its energy strategy. We'll be keeping a close eye on how this move affects the global energy landscape and the implications it may have for other countries and industries. We'll be right back with more of today's top news on Concrete Block. Welcome back to Concrete Block. We're diving into the world of finance and energy today with a story that's got everyone talking. The stalemate between the US and Iran has led to a significant surge in crude oil prices, with the cost per barrel exceeding $100 for the first time in 3 weeks. This development is largely attributed to the ongoing closure of the Strait of Hormuz, a critical waterway for oil tanker traffic. As we explore the situation further, it's essential to consider the various factors at play. The US-Iran tensions have resulted in a blockade of the strait, severely limiting the flow of crude oil, natural gas, and other petroleum products. This reduction in supply has naturally led to an increase in prices, sparking concerns about potential inflation. The impact on the stock market is also noteworthy, with the S&P 500 experiencing a mild decline in pre-market trading. Despite this, oil stocks have seen modest gains, although not enough to offset the overall downward trend. It's crucial to acknowledge the complexities of this situation and the diverse perspectives involved. While some may view the US stance as a necessary measure to prevent Iran from obtaining nuclear capabilities, others argue that the blockade is having far-reaching consequences for global energy markets. As we continue to monitor this developing story, it's essential to remain informed and consider multiple viewpoints. The situation in the Strait of Hormuz serves as a reminder of the intricate relationships between geopolitics, energy, and the economy. Welcome back to Concrete Block. As we wrap up today's show, let's take a look at the latest developments in the world of technology and artificial intelligence. We've got a fascinating story that highlights the rapid advancements being made in AI research and development. It appears that tech giants like Meta, Google, and OpenAI are facing a brain drain as top talent leaves to launch their own AI startups. This exodus of skilled professionals is likely to have significant implications for the future of AI innovation. On one hand, it could lead to more diverse and innovative solutions being developed outside of the traditional tech giants. On the other hand, it may also result in a loss of institutional knowledge and expertise that could hinder progress in the field. Meanwhile, the use of AI is becoming increasingly pervasive in various aspects of our lives. For instance, a recent study found that AI now generates a third of new websites, making the web more cheerful and less verbose. Additionally, AI-powered tools like DeepSeek are being priced significantly lower than those offered by industry leaders like OpenAI, which could make AI more accessible to a wider range of users. However, As AI continues to advance, we're also seeing a growing backlash against its development and deployment. In rural America, for example, there's a rising tide of populist sentiment against AI, with voters pushing back against the technology. This resistance is not unique to the US, as anti-AI protests are expanding worldwide. It's essential to consider multiple perspectives on this issue, weighing both the potential benefits and drawbacks of AI development. As we move forward, it's crucial to prioritize transparency, accountability, and responsible innovation in the AI sector. That's all for today's Concrete Block. Remember to like, share, and subscribe, and until next time, stay informed.